Welcome to Subramani. Every bubble needs a pin, right? So last Wednesday, President Donald Trump decided to provide the pin needed for financial assets across the world. So he stepped up in the podium in the Rose Garden and announced a reciprocal tariff on all the countries, whichever he could think of, and some at a higher rate, some at a lower rate. And then he called it Liberation Day. He stood at the whiteboard, reminding you perhaps of school. And the markets spooked. Now, the markets could also be spooked by the Democrats who wanted the market to really bleed to make President Trump look bad. I'm not getting into the political things of it, but the market took the shock pretty badly. And both, I think, Thursday and Friday, market was on the free fall, falling 10% and 11% for the S&P 500 and the Nasdaq. And this, I think, is the worst stretch for US stocks since 1950. No, that's going real long back, right? You're talking of 75 years back. So what exactly should the long-term investor do? I'm assuming that anybody who comes to my channel is a long-term investor. So first, don't base your decisions on emotion, saying, oh my god, this share was 5,100, now it has come down to 4,800, it's a good buy. No, this is emotional. You've seen the price at 5,100, so you're making the classical behavioral finance mistake of anchoring. So suddenly you think 5,100 is a good price for it, so at 4,800 it's a good buy. Not true. It may have gone up from 3,100 to 5,100, so you might as well wait and you may be able to get it for 4,100, right? So don't emotionally decide on that day that this is happening. Watch it for a day maybe. I'm not saying watch it for a month, but watch it for a day and see what's happening. See whether it is settling down at a lower level. And don't base your buying on some WhatsApp message which you have received saying, oh, this is the worst is over, the market will now go up. You will hear all these things. You will also hear that Trump is rolling back the reforms and there will be no reforms. None of this will happen. Then some Democrats wanting it to get worse, some Republicans themselves saying, oh, let us make it worse for Trump. The further elections which are coming should be bad, right? So all these things, all these political noises will happen. So don't get carried away. Be very clear that you are in it for the long term, and in the long run this will be a blip, right? So when you make very long term graphs, this will be a blip. But please remember, reading about a blip and feeling the blip are two completely different things. I was in the market in 91, 92, 93, 94, 95 up to 99. I was there throughout. It was a very painful thing. So remember, it will be painful. And I don't think there are any magical strategies to avoid the pain, right? So there will be pain. If you run a marathon, there will be pain. If you do fasting, there will be pain. If you do investing, there will be pain. If you do trading, there will be pain. If you do any business, there will be pain, right? You can't avoid it. You cannot say, I will outsource the pain to somebody else. No, it is not going to happen. There will be pain. You will see the shares that you bought with a lot of research now doing very badly, and you will have to live with that. You don't have a choice. You don't have shortcuts, right? So anybody who is investing will live through the pain. So this is your pain learning period and pain learning stage. So the market doesn't wait for all the good news to come for the market to get better. Suddenly it get better, then it might get even worse. So when the news improves, it's too late. Look at COVID. February there was no COVID. March 2020 there was COVID. March, April, May, June, July was perhaps bad. August it started recovering. September the market said it an all-time high, right? So death rate was perhaps peaking, but the market was hitting an all-time high. So, and of course the famous saying this one is different because all others were created by nature. COVID was created by nature. The GFC crisis 2008 was created by so many market forces, but this one has been created by one man. So can this man roll it back? I have no clue, but it is possible that if he rolls back, all that is lost in the market in 1 week or 2 weeks could just come back in hours, right? So am I saying that will happen? No, I'm not saying anything like that will happen. Trump has always believed in tariffs. There are 20-year-old videos of his in the Oprah show show where he's talking about why tariffs are important. So this one is not different, but to think that every meltdown is different from the previous meltdown is also wrong. So this time it is different is wrong, and this time it is not different is also wrong. So you don't know what is going to happen, but you have to be ready for it. Then you need a pressure valve to say, okay, I don't need the money in the next 2 years, 3 years, 5 years, 10 years, so I will wait. I may not put more money. So there are 3-4 things you can do. One is say, I'll do nothing. In this, there is no regret. You say, oh, I heard people say you should do nothing when the market falls, so I did nothing, so I have no regret. The market has come back, so I am fine. The second thing you can do is to say, I'll stop my SIP, because I'll stop buying, or I'll stop my SIP. In this case, when the market recovers, suppose the market recovers very quickly, then there will be regret saying, oh God, why did I stop it? Because you did some action of stopping the SIP and then the market recovered, so you will have some regret. The third is you sell off some shares and say, oh, these travel companies won't do well, airlines won't do well, oil companies may not do well, they are absorbing a lot of hikes which the government is not allowing them to pass on. So let me sell some of these shares and let me buy something neutral like HUL or an ITC, which or maybe some pharma company which will not fall as badly even whatever happens to the world. So right, so 3 things. One, in which there's unlikely that you will have any regret because you did nothing. In the second case, you might have some regret if the market comes back very fast. In the third, you will have lot of regrets if your decisions were wrong, and the high probability that your decisions will be wrong. So on one side, you're trying to guess what Trump will do, and we have no clue what he will do, so that could lead to further pain. So should you be investing, should you be doing nothing, should you be investing more, should you be shuffling your portfolio? It's a call which each one of us has to take. So what am I doing? I'm buying more of the shares which I already own, which I think was a good buy at a particular price. If it is falling 20% from there, I'll buy, but I'm very clear about the 20% fall. Right, so you need a pressure release saying, I will not be worried because I don't need the money now. I have cash to meet my expenses, I have income to meet my expenses, whatever. Right, if you have got cash waiting to be invested and you thought this is a good time to be investing, maybe it's a good time for you to invest. You are waiting for a 20% fall, market has fallen 17%, 18%. Don't wait for the exact 20% fall. If the market has fallen 17%, go and buy. Market has fallen 18%, go and buy. Market has fallen 22%, go and buy. Because depend on how much money you have and how much you wish to invest. That is something which you can do. Right, of course, it's a good time also to be rebalancing. If you're excessively oriented towards small and mid caps, chances are the fall would have been greater there, and your large caps would have fallen less. But your large cap may now look more attractive for you to buy, and so maybe you should buy some large cap stocks or put into a large cap fund. So some kind of rebalancing between how much in equity, how much in gold, how much in debt instruments, and some selling of some debt and buying some equity. That's something which you may be able to do. Right, and just remember that nobody knows what is going to happen in the future. Yesterday I was asked to be on a television channel, but I couldn't, where it would have been just saying, oh my God, there is bloodbath in the market and there is blood on the streets, what should one do? I think you should just take a deep breath, do some Vipassana, and believe it or not, I think in March 2020, I told Swati Kumari on Zee TV that people should do Vipassana, and recently I believe she had gone for a Vipassana also. So yeah, take a deep breath. Markets will do what it does. You have to do what you have to do. Just relax. Like I said, all 3 strategies: do nothing, invest more, reshuffle your portfolio. All 3 are open. All 3 will have different levels of regret, because if you do nothing and the market goes down and then goes up, you will feel, oh, I should have invested more. So all 3 will have regret. But I have found that the one with the minimum regret is where you did nothing, because you say, look, I did nothing and nothing happened, and then the market went down and came up, whatever. But I just stuck with my SIPs and I have not done too badly, because 3 months the market was bad. I still put my SIPs, I got more units and I have done well. So all the 3 options are open. Decide what works for you, and decide what works for you in each share. I mean, if you're a direct equity investor, something might, in some shares I might say, oh my God, I'm stuck with this, I'm not buying more of it. it, and some I may say, oh, this is a good opportunity, let me buy more. So all options could be open for each share, but for a equity portfolio, you have to think in which portfolio to put. I would suggest when the market has fallen and you're buying just for that, index makes sense, because index is surely going to come back. Your funds may or may not come back that quickly. Thank you.